that's kind of the misconception in the assumable market. While the idea behind it is great, it is.
Hey, Brian Thompson here with eXp Realty with Matt Primrose, Loan Officer, New American Funding, NAF for short. So assumable loans right now is going to be, it's a hot topic, if you will. You hear a lot of people talk about it, but they don't know exactly what it is. So we're going to talk about FHA and VA assumable. So Matt, take it away.
Yeah, no problem. So I know, one of the popular items out there is, people that are looking for homes, hey, this loan has a, 2.25% FHA assumable, 2.5% VA assumable. While yes, those are fantastic, I want to give you some details behind it. Okay, so here we go, Brian. So the idea behind it is that person, yes, you can assume their loan. However, what you need to understand is that you are assuming the existing loan balance. So let me give you an example. Let's say someone bought a home, Brian, for $300,000 5 years ago, right? And that home now is selling for $400,000, right? Okay. Just for argument's sake, let's say, obviously I know if someone pays their payment down, it reduces the principal, but let's just say it's still at 300, right? So that person, if they would like to assume that loan, yes, they can. Now, number one, it only goes through the existing servicing lender. Unfortunately, they couldn't use me, they couldn't use their own bank, whoever. Whoever is currently servicing the loan has to take on that loan and approve that person. The second piece is that person has to qualify for the existing loan amount. So what that means is that they have to either bring in enough for to get to that $300,000 loan amount in that example there, or obtain a second lien for the difference if they don't have the funds to come up with that. So that's kind of the misconception in the assumable market. While the idea behind it is great, it is a great product to be able to assume a much lower interest rate. Those are only on your FHAs and your VAs. We don't see many non-QM conventional type of products that let you assume.
Right. So a big misconception out there is that a non-veteran can assume a VA loan, correct? Yep. So I've seen a lot of people shy away and from inheriting, assuming a veteran's loan, thinking because they are not a veteran, they cannot do it. Some very low VA loans are right there, and there's some opportunities out there for people.
Yeah.
So another thing that people are struggling with is thinking that a conventional loan can be assumed. And I have never seen one. I don't think you have ever seen one.
I haven't seen it, yep.
So that's another thing to kind of shy away from. And also make sure if you are putting an offer on a home that has an assumable loan and you want to assume, put in probably a 60 to 90 day window for closing in there, because these banks are not moving quickly on those. I have no idea why, because they're keeping the loan in their name. And
I can tell you why. They want you to get a regular loan at 6.5%.
With them, nobody goes to Wells Fargo hardly anymore for a direct loan. So, that's it. We're going to talk real quick about Streamline in another video because we're going a little long. Talk to you soon.